Yo, what is good, YouTube? We are back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. Someone in the Discord asked me to make this video, so I'm going to be making an ICT trading plan video. The reason I haven't been uploading for a little bit is because I haven't been trading my funded accounts. I'm done trading them the rest of the month. The price action is just not good right now that I like, so I'm not going to trade my fundeds. I'm going to be making a series on passing a 50K account using only micros, but that's not what this video is about. So we're going to be going over how to create an ICT trading plan. So the first step of this is, what are your higher time frame key levels, right? If you're not trading off of a higher time frame fair value gap, order block, a SMT on the higher time frame, soup, you're just going to get ran through, right? You have to be identifying what is going to be sending us to the draw on liquidity, right? What are my higher time frame key levels? That is what you always need to be starting off with. You have to go to that 1 hour, 4 hour, even the daily, whatever that higher time frame key level is. You want to be trading off of that so the probabilities are more in your favor. Whatever higher time frame key level you want or you like, trade off of that and force your trading plan to only have one higher time frame, two higher time frame key levels. So once you identify these higher time frame key levels and you only start taking trades off of these higher time frame key levels, you'll see how much more you will have success in the charts. So the first step is you have to identify those higher time frame key levels. There's no ifs, ands, or buts about it. You can't trade without them. So the next step, number 2, is obviously what session are you going to be trading? Are you going to trade Asia, London, or New York, right? Most people trade New York, but if you're a London trader, even an Asia session trader, it's fine too. So you have to identify what session are you going to be trading. Now, the next one is time on your side. So I don't know much about Asia session. So London session, 2 to 5, right? Are you trading within that key time frame window, 2 to 5 in the morning? New York session, 8:30 to 11. Are you trading inside of that key time? And afternoon, 1:30 to 3, right? Are you trade or market on close, right? If you're trading market on close, that's cool too. But is time on your side? Are you using the macros and are you using the kill zones? So you have to have time to be on your side. And you might have just saw everything else. Just don't pause the video. Number 4 is, what is our high probability draw on liquidity, right? So those higher time frame key levels have to be hit before we go to that high probability draw on liquidity, right? We can't move without a turtle soup. So once we get in that higher time frame key level, and that's actually in the trading plan, once we get in that higher time frame key level, what is going to be pushing us to that high probability draw on liquidity? So you have to have those higher time frame key levels, and you have to have an overall high probability draw on liquidity, an old high, an old low, or internal range liquidity, which on the lower time frames is your highs or lows. So if you have an hourly fair value gap, it's most likely a 5-minute high. So the next step is going to be, what is the narrative that will push us there, right? So once you have identified that high probability draw on liquidity, what is the narrative on how we are getting to that draw on liquidity, right? And the narrative is going to be coming from your higher time frame key levels. So once you identify your high probability draw on liquidity, right? The daily chart, if we just want to go to the daily, right? Even if you want to make it the most simple thing ever, right? So like right here, we have all this chop. This is whenever you'd go to that lower time frame and identify a lower draw on liquidity, sorry. But like right here, right, we close above this candle's high. So this is going to be the draw on liquidity. Whenever this candle closes back inside this candle's range, and weekly profile, Friday should be continuation of Thursday, this can be your draw on liquidity, right? Weekly profiles paired with daily profiles will give you those high probability draw on liquidities, right? So you have to identify that. Whoa, 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 whoa. Whoa, 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 whoa. Boom. Get out of here. Okay, so you have to identify high probability draw on liquidity paired with your narrative on how we're going to be pushing there. that is formed by your higher time frame key levels, right? So as you see, this is all blending together. What session are you trading? New York. Okay, well, am I executing from 8:30 to 11? Okay, there's time on my side. Higher time frame key level. Where is my higher time frame key level that will push us to the draw on liquidity? That's the narrative, right? And have we had a proper soup or an SMT, right? You can't move without a soup. The only way we go from a high to a low is a turtle soup, right? So right here, how did we start this move lower? If we go to the hourly chart, this would be your soup, right? This would be your turtle soup. We have a range set, right? We're using this candle, these candles range from this high to this low. As you see, we're clearly ranging. We can't move to this low until we take this range high. Why can't we move to this low? Well, we're just accumulating, right? And to get to this low, AMD, right? This would be your manipulation, right? This is narrative, right? We are in a range. We can't get to this range low since we're accumulating. We have to manipulate. What time do we manipulate? 10 a.m., right? 10 a.m. opens up right here. We accumulate, manipulate on the lower time frame, distribute lower, right? And now we should go to the range low, right? That is how you identify those proper soups. So this is a proper soup on the higher time frame to push us to the range low. Right now I need to find where I just hid all of that stuff. Boom, 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 boom. I don't know where I put all of that. Okay, there we go. Well, you guys see everything now, so you guys see everything. This is not how I planned on doing this. So, proper soup. What's your entry model? You have to have that entry model. Are you taking the soup or the SMT? I know some people in my Discord take the soup, right? So what's your entry model? Are you going to be taking the soup, or are you going to be waiting for a CISD, take the order block, or a fair value gap, or a breaker? Are you waiting for the high probability breakout to occur and then retest the breaker and rip even further, right? Or are you taking that CISD, or are you waiting for a fair value gap? So it's all dependent on what you want to be taking, right? Etc. Rejection block. There's too much to even remember. I don't even remember them all. But yeah, I mean, I pretty much only use these three and highs and lows. I don't even use breakers that much anymore. But if I'm already in a trade, or if I want to be a part of a trade and I failed to enter before the expansion, then I'll use a breaker. So defined RR, right? I don't take anything less than a 2R. And that's just based on what you want it to be, right? If you want a high win rate, you can go for 1-to-1s. If you want a 50% win rate, you can do the 2-to-1s. If you want a 3R, you only need a, 38% win rate? So whatever you want your RR to be, that's what it can be. Now the final one is allowing the probabilities to play out, right? So this is where it all comes together. Narrative. You have your narrative and the high probability draw on liquidity. The first step is always the draw on liquidity. If you identify that high probability draw on liquidity, you have to build your narrative. When you've built your narrative, you have your higher time frame key levels, right? These two go hand in hand. Narrative is formed from your key levels to push to the draw on liquidity, right? And then these two, obviously, your session and is time on your side, kill zones or macros. And then have we had a proper soup, just like I showed you, right? After we take this low, the model's over. You wait for structure to build, and then you wait to see if we displace through this low, and then we have a buy model to go into the fair value gap, turning into a sell model back down to the low that's formed, right? This is how narrative and soups are formed, right? You soup this low, see the displacement. Do we come back immediately into the range and displace back in? Okay, well, we probably either chop around or we return back to the high. Okay, we displace through the low, displace, we probably build some structure and have a soup to go back lower, because you can't move out of a range without a proper soup. So after you have had that proper soup, your entry model comes next. Is it your defined RR? Entry model, defined RR. And then you allow the probabilities to play out, right? So the other thing he said is FOMO, right? How do you neglect FOMO? Is right here, right? If you don't have a model to get in on this wick, right? If you don't have a model, oops. Wait, what am I about to label here? I don't even know what I'm labeling there. If you don't have a model, to get in on this wick, right? This is 10 a.m. 10 a.m. opens higher. If you go to the 1 minute and you don't have a set model to get in, I don't even know what I would have entered. I wouldn't have entered here, right? It's just straight down. It doesn't matter. What can't the market do? Go straight down forever, right? It can't just go boom and it just can't do this, right? It just doesn't go straight down like this. Yes, there are times that maybe the market does just go literally straight down or straight up. You're not a part of the move. It doesn't matter. It has no bearing to you because your model never presented itself. So whenever you have a back-tested model that performs good in the market, you'll see this move and then try to catch the retracement, right? You can do that. You can catch the buy model to go to what? Discount, right? To discount, OTE. And then what do? Okay, well, we've reached a discount. Let's see what happens from here. Okay, we're not really displacing lower, so, oh, look, we displaced higher. Oh, look, we're probably going to go higher. That's whenever you notice that you can get in on the retracements, right? And the displacement leg or the SMT will show you its hand, right? SMTs show you the hand, and then you get in wherever you want. I mean, the FOMO is just in your head. If you seriously can't watch the market dump 100 points and your model wasn't there, there's nothing to say, okay, well, how could I have entered this? You can do that. How could I have entered this trade? That's fine. But whenever you start chasing a move like that, you're going to get caught in this slow move higher and be like, well, I entered here. I'm in drawdown, drawdown, drawdown. Well, we're not displacing lower. I don't think we're going to be going lower. Boom. I'm just going to get out of here. Okay, we go lower. Now we're retracing. So you can't get upset if you truly, truly missed out on a move that had no entry model for you. Right? So I don't know where I put those. I might have deleted them, but you guys can go back, pause the video, and build your trading plan, because if you have FOMO, it's just in your head. You just have to get rid of it, right? So yeah, I mean, that's pretty much the video. If you enjoyed, drop a like, and I'll see you guys in another one. I'm just gonna call it for the day. I took my trade. You guys don't get to see it unless you're in the Discord, because it's gonna be a part of the series. Other than that, I'm out of here. Peace.